Futures trading is risky and can result in substantial financial loss.
Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short Term Trading Live with Oscar. It's Friday, all right. We had direction nailed yesterday. We talked about it getting as high. The S&P is 1542, dead high for the day. So our scope is on. Let's see if we can make some money on this thing tomorrow. We got triple witching June options in the indice markets and the stock markets. It's going to be a bit brutal. Triple witchings always are. As you've seen this week, has been up and down like a tug of war. Well, we'll get this out of our way. Ugh, triple witching out of the way and let us trade already. So that's going to happen tomorrow. It lasts from middle of the day through first thing Monday morning. So beware that there will be some market movement that's a bit erratic because of that. A couple of things I wanted to talk about. We had an outside day reversal up in the S&P. I showed you the chart yesterday. It actually happened. Actually, I showed you the chart Wednesday night for Thursday. It happened on Thursday. It was a nice trade, nice call anyway. We couldn't get in if you guys followed my exact numbers. But so far, so good. Again, our scope is on. It's what we're hoping for. So I want to show you something. I got a quick chart just to illustrate the outside reversal day up. There's also gold and silver sitting out there in the wings, guys. There is a 200-day moving average that silver and gold love to revolve around, or at least love to bounce off of. And I'd like to show that to you. So let me show you a few charts, and then we'll take a look at what we want to do for tomorrow's trading in the S&P and the NASDAQ. Okay, so for my OMNI technicians out there, I mentioned an outside day up, a reversal day, which would be an outside day up, right? We call them outside reversal day up or down. Here is the outside reversal. You had 2 days ago, not yesterday, Thursday, not Wednesday. Tuesday, you had this trading range. Wednesday, we went lower than Tuesday's low and went up higher than Tuesday's high and settled. That, my friend, ladies and gentlemen, traders, that is an outside reversal day up. That is just about a giveaway trade, letting you know we will likely settle higher the next day. You can almost always count on that working. Well, here is Thursday. Bam, we took off. Exactly what this thing said. Our projection from this was 1542. That was the exact high of the day. Let me tell you, techniques do work. That outside reversal day was picture perfect. Technically, it went exactly to the top of its projection. We also talked about gold and silver and what they do around the 200-day moving average. Well, here you go. I'm going to darken that average for you right now so that it just looks a little darker. I have found over my years of trading that gold and silver especially have violent reactions around the 200-day moving average. Let's take a look at the August gold daily bar to begin with. August gold ZGQ7 daily bar with a 200-day moving average. Almost any time this average is violated, it has a big drop to the downside. When it gets above, it usually has a nice rally. We're talking about when the contract was not top step, so to speak, back here, and it still worked quite well. As August becomes more active and more actively traded, you see again when it breaks down, it's major. When it gets to it, it has resistance. When it gets above it, major run. Comes back down, dips under, runs right back up. Touches it, major run. Comes back down, misses it by a hair, major run. Comes down here, boom, settles underneath, settles above, settles underneath, settles underneath, settles above. We are just about ready to break out of this market. Technical indicators say towards the upside. Trading the 200-day moving average off of a gold chart, you do not have a direction projected yet, not until gold settles above this average for 3 days or below it for 3 days. You had 2-day settlement below and it stuck its head up and settled above. I think if we could get above this tomorrow, you'll get a run up. But by the same token, because of the nature of the way the gold reacts around the 200-day moving average, if we settle lower again, we're going to have a breakdown. This is finally going to break down through this average like you've seen here and have a major down day. So I have to make one of those calls. It might go up, it might go down. I don't know where it's going, but I will know as soon as it gives us signal, and I will keep you guys informed. That's the gold chart. You think the gold looks good around the 200-day moving average? It looks like it's silver's best friend. Again, 200-day moving average. Let me darken that for you. Look at what silver does around the 200-day moving average. And if you guys go back and look at some of my videos, this move and this move, if I remember correctly, we called both of these as big bull runs off this 200-day. We did a video on it at the time when it happened. So go back, look through my video library, and you'll see what I'm talking about. We always trade this when it comes down here. It got a little fuzzy here. One day we had a settlement through and it broke and it stayed underneath the whole time. There is not one settlement since the break. Comes back down again. Gets above, settles, bam, straight up. Comes down, settles below, and just like gold, runs up, settles above, runs down, settles below, and settles just at the average now. This is telling us, as gold did, if you just look at it, look at this run. Silver hits the 200. Wow, what a run out. Silver hits the 200 again. Wow, another major run out. Silver hits it, messes around a little, but anytime you were under it, you stayed under, almost guaranteed. And anytime you're above it, you stay above. A little bit of confluence taking place around that 200-day average right now, as with the gold. But ladies and gentlemen, mark my words. I've showed it to you before. You'll see it again. We have a major move about to take place off this chart. Now, some technicians might look at this and say, well, here's a shoulder, here's a head, here's a shoulder. Flip it over, we're going down here. Other people may say that it's more of a continuation of this pattern. I say keep it simple. Go off the 200-day average. If we start settling above it, we're going to skyrocket. We settle below this one more day, we're going down. I'll trade it for what it says to do, and I'll be proactive at the moment in time, not reactive, but you need to wait for the signal first. That's the chart segment, ladies and gentlemen. I hope I showed you a little something that'll help you with your trading each day. Add this tool into your trading arsenal. So you seen the charts? You see what that 200-day moving average does around the silver and gold, or what the gold and silver does around the 200-day moving average? Either it hits and rallies away, or it breaks through and has a breakdown. Something is going to give here. We'll see. I'll be able to make the call most likely for Monday. Can't really make the call for tomorrow, but it should give us our direction by tomorrow. So let's see what we get. Okay, S&P for tomorrow. SPU7, ESU7, the large and the mini. We're expecting an up day. We have a green Omni. Let's go, baby. Let's go. You heard me get insane on Saturday or Sunday or Monday or whatever video it was and tell you I thought new contract highs would come our way by Friday's end. Well, by weekend, here we are. It's Friday. We have an outside shot. Let's see what's going to happen. I think NASDAQ probably has a better shot of contract highs than does S&P. But again, you got a big report coming out tomorrow morning, and sometimes reports just make my trades go, but we'll see what happens. I expect that the trade's going to work, of course, as I always do, and I'll stick to my guns. Omni support, 1533 to 1532. Place your orders, MIT market. If touched, we're currently trading around 1538 and a half. Omni turns neutral if we get below 1526. Look at that, guys. Stops are pulling into within $6, $7. That always tells us something major is coming our way. Either a big run up or a reversal. Again, it's one of those things you can't tell until it starts to happen. But stops are starting to get tighter here, so remember that. Omni's profit objective, 1550 to 1551. Again, MIT. So if we get in at 1532 to 33, and we get lucky and they don't take us out below 1526, up to 1550, maybe 1551, that would be fantastic. Some resistance is expected at 1545.75 for you mini S&P guys. 1545.75 on the way up. Should run into some turbulence there. If we don't get what we're looking for, be out MOC, which is 4:15 Eastern Daylight Savings. That's what we consider the close. So be out by the close. In the NASDAQ, another green one, baby. Let's go NASDAQ. The ENU7, the NQU7 mini and large. Omni support in the NASDAQ, 1943 to 1942. Play some MIT if your platforms allow. We're currently trading now probably about $6, $7 higher than that. Omni turns neutral if we drop below 1933. Again, here, stops come in to within $10. That's a relatively smaller stop than usual in the NASDAQ. That tells us something's brewing here. Omni's profit objective, 1972. Could you imagine 1972? But that's what the analysis is telling me. So if we get long in the 40s, we may get the 70s out of it. The resistance is expected on the way up at 1963 or be out by the close again, which is 4:15 Eastern Daylight Savings. So I'm expecting up on both sides. I don't think much will stop it. The markets look good. We got triple witching. I'm excited. You guys are excited for tomorrow?
We're excited.
Yeah, baby. Tomorrow's going to be our day. I will be redeemed. We'll see what happens. Anyway, if you'd like to get my videos, YouTube seems to be back on the spot again. Our videos are going right back out. Go to my YouTube spot, www.youtube.com/Futures Analysts, and hit the subscribe button, and that will give you our videos. As soon as we put them out, YouTube will shoot you a video. You can always get on our Flash Updates database by going to our site, and we're so proud of it, and that site is doing so well. It is www.livewithoscar.com. Go to the site, fill out a free registration form that will put you on our Flash Updates database and enable you to get my Flash Updates, which is my way of letting you know when I'm making changes to our resting orders or our stops or getting in or getting out. I do a blast email and I update the website every day at any moment that I'm doing a Flash Update. So get on the Flash Updates database so I can shoot you out that email. You know, ladies and gentlemen, I tell you this every day, and it is so important that you do your own homework. You should take my Omni direction. It's green. See if your work is bullish. If your work is bullish, that means you have a green Omni day as well, and then possibly take my trade. What you should do is just use the direction and my profit objective to let you know it's going to be a bullish day. He thinks it's going a lot higher, and get yourselves in where you think you should, and then just use my work as a gauge. That's what I mean when I say do your homework. Just use me as another indicator, like something you'd pop up on one of your trading platforms. What does Oscar think? Hit the indicator and see what I think. If it jives with your work, go with my trade. That's what I say when I say do your homework. That's what I mean. So do your homework. If nothing else, it'll teach you how to do this closer to the way I do it. You know, send me an email, please. The emails have been coming in like crazy, and guys, I love that, and you know I send back answers. Please keep them coming. We really like your feedback. Send us emails at oscar@futuresanalysts.com. We'd also like for you guys to go into our forums, our trading den. It's step 4 on our site. Go into the forums, take a look at what guys are talking about in there, drop off some comments, post your trading suggestions and or your analysis techniques, and I'll get in there, I'll look at those questions and I'll answer them for you. And we're building a nice little foundation in there. There's a nice crew of people that go in there and talk. It is not a place to be intimidated. No one bashes each other there. It's a nice trading academy. It's a nice place to spend some time during the day while you're waiting for markets to come your way. Last but not least, you can always give me a call at 718-351-2266. Okay, ladies and gentlemen, place your stops first. You've heard me say this a lot of times. Place your stops first. It'll save you a fortune. Put your stops in before you put in your entry orders. Let's say you want to be a buyer. Put your sell stop in first, then enter in your buy order. That's the way I do it. It will save you one day when a disaster takes place. And finally, as you know, I say this to myself every day. I want you guys to say this every single day. Say it before you place orders. Say it once the orders are in. And especially say it when the market is going against you a little bit after you're into a position. And you know what that is. Stops are in, emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.